moving averages are a very helpful tool for trading. I like to consider them uh, the training wheels for traders. A lot of people frown upon them, but if used correctly, they could be a great weapon for you to use. So I'm going to dive right into this, and then I'm going to show you how to set them up, the exponential moving averages and SMAs that I use, and why I use those in particular. If you have any questions, of course, please leave them for the end. I already know what that one question is going to be. What's the difference between SMAs and EMAs, and which ones, why pick one over the other? I will answer that towards the end. So keep that in mind. So understanding EMAs and SMAs for market analysis. We're going to do a quick introduction. Moving averages are basically fundamental technical indicators used by any trader, not just professionals, to identify trends and spot trading opportunities. They help filter out market noise and provide a clear signal for both trend direction and potential entry and exit points. The first type of moving average that everyone learns how to use is the simple moving averages, which is basically the foundation of technical analysis. You'll hear a lot of people say the 10, the 20, the 50, the 100, the 200. These are systematic moving averages that are used by traders to have an idea of where price is gravitating towards. So, simple moving averages provide a straightforward way to measure market sentiment for a specific period. And the only reason that I'm giving you the calculation is because you're going to understand very quickly why simple moving averages are what they are as opposed to EMAs. So, think of simple moving averages as a slow moving average. That's the only thing you have to know. Why is it slow? Well, it's slow because what it does is it grabs the amount of days of that moving average. So in this case, we're using the 5-day moving average as an example. It's going to grab the 5 days, it's going to add them up, divide them, and it's going to give you an average. That's going to be your 5-day SMA. So it's basically equal weighting all of the days and dividing them by 5 to get that moving average calculation. This is why SMAs are known as the slow moving SMAs. On the other hand, you have exponential moving averages, which I always explain them as pretty much an enhanced trend recognition average. And the reason I say that is because exponential moving averages have the ability to give you a quicker response because it's taking recent price action into account. In other words, exponential moving averages are putting weight on the most recent price action as opposed to SMAs that are putting equal weight on all of the days. So again, you have to think of exponential moving averages as nothing more than a fast moving averages. There's pros and cons to both, but for day traders, I always recommend exponential moving averages because they're more reactive. For swing traders and for individuals that are looking for bigger moves, I always recommend simple moving averages because they're putting more weight, right, equally throughout price of the day, as opposed to exponentials that are more reactive to what happened today. Here are some key periods that I like to use, which I recommend for anyone that wants to trade EMAs to start with. You'll hear a lot about the 9 EMA, the 10 EMA. Whatever you want to use, you can use, but I like to use the 8 EMA. The primary use for the 8 EMA is to identify short-term trend. You can just use one EMA and use that as a guide of how price is moving on that day, 8-day average. But the application of exponential moving averages is to combine them with more than one if you're trading EMAs the way that most people do, which is with EMA crossovers. So scrolling down, the 8 EMA is ideal for day trading and scalping. Its key characteristic is that it's highly responsive to price change. And once again, the common application of it is that it's often combined with the 21 EMA. The 21 EMA, similar to the 8, is a short to intermediate term trend confirmation. It's great for swing trade strategies, and it has a more balanced response than the 8 because it's grabbing 21 days of information, right, and putting it together. And of course, the way that it's normally used, it's that you look at it as support and resistance. You'll hear a lot of people say, oh, it's going to the 21 EMA here. If it breaks below that, it's going to go to the 50, vice versa. If it breaks above the 21, it has a tendency to have a continuation to the upside. The 50 EMA, which for me is the most important of them all, is primarily used for intermediate trend identification. Okay? This EMA, for me, is the best EMA to confirm trend. Normally, when price action breaks below the 50, you have a directional shift of the market. Think of it as a pivot point, right? And when you have a key pivot structure, if you guys remember from my previous video, what ends up happening? When you have a key pivot structure break to the upside, you have a continuation of trend. If you have a key pivot structure, in this case using the EMA, and it breaks below, you're going to have a continuation to the downside. Now, the 200 EMA, it's a long-term identification. So when you look at the 200 EMA, you have to look at it as a critical break point for confirmation of all of the smaller EMAs. In this case, the 8, the 21, and the 50. When price breaks and close above or below the 200 EMA, you have a directional shift and confirmation of the market direction. The 50 is a trend validation. The 200 confirms that there is a changing of the guard. All of these things work hand in hand. And I'm going to show you on a chart how they work. If we go down a little bit, I'm going to explain the different strategies, or the strategic differences, as some might say. So, what are the benefits of the SMAs? Well, guess what? They reduce false signals in trending markets. They give you a better, clear long-term identification. EMAs, the benefits are that they give you an earlier trend change signal. Okay, but what happens when you have an earlier trend signal change? It could be a false one. Okay, it's better suited for short-term trading. And as I mentioned before, it's more responsive to current market conditions. Here are the most important moving average crossover strategies. One of my favorites are known as the golden crosses, which is basically when the 50 EMA crosses above the 200 EMA. When this happens, you're looking for a potential long-term bullish trend. And it basically confirms whatever trade you're in, and it allows you to feel comfortable that you're going to have that directional move. Again, you have to understand that moving averages are lagging indicators and they are not going to be foolproof. So you're using these squiggly lines as confluence to price action. Now, the opposite of the golden cross is the death cross, which is the complete opposite. It's when the 50 EMA crosses below the 200. And that means that you're going to have a potential long-term bearish trend. And let's say that you're bullish and suddenly you have a 5200 cross to the downside. You basically at that point have to make a decision and say to yourself, I'm on the wrong side of the trade. It's the same can be said for the golden cross. If you're short and you have a golden cross, you can basically say, okay, I'm on the wrong side of the trade. But remember, maybe you're not, because at the end of the day, these are lagging indicators. I put this as an example so you guys can get a clear perspective. So you have an 821 and a 50 EMA, right? And there are the prices. And you can see the current price. So when price is above all of the EMAs, it indicates bullish momentum. So if price breaks and closes above the 8, it breaks and closes above the 21, and it breaks and closes above the 50, right? You can sit there very comfortably knowing that you're in the right side of the trade. In a perfect world, it would be incredible if you're trading and all of your EMAs are called are what is known as coiling up. In other words, they're all very close together. So the 8, the 21, and the 50 are almost like stacked perfectly above each other, because when price breaks above a stacked group of EMAs, what's going to happen is the short term, the midterm, and the long term EMA are going to move price up and follow price action with it, which keeps you in the trade. So what happens is you'll have those 3 EMAs all moving simultaneously in the same direction. And of course, they'll start to spread out. But when you have a break and close on a coiled EMA setup on a short-term time frame, most of the time you're going to have a continuation to the move. I'm going to show you an example of that later on. So here are the implementation guides. Best practices. Multiple time frame analysis. Don't just sit there and try to do EMA crossovers or trade on the 1 minute. It's not going to help. You need to have lower time frames for entries and exits and higher time frames to confirm the trend direction. You need to be looking at different time frames to understand where you are on the bigger scheme of it all, right? Risk management. EMAs will give you a better understanding of where to set your stop loss. So if you're in a great trade and you're up, let's say 7 points from entry, and it starts to break down, and you know that the 21 EMA on a longer time frame is 3 points from the high, well, you can slide your stop right up to that 21 EMA or a little bit below it. You're risking 3 points on that 7. I'm sorry, let's just say you made 8 and you're putting your stop loss with a 5-point profit. You're risking 3 points, and you put it just a little bit below the 21 to see if it breaks and closes below it, or if it's going to bounce off it for another continuation move to the upside. But at least you're managing risk and you know where to put it, right? So the EMAs serve as a great levels for support and resistance. So technical considerations. You need to combine EMAs with other things. You just can't have EMAs on your screen, because it's gonna drive you nuts, because you're not gonna know what's happening. So you need to have volume analysis. You need to have price confirmations, and you do need to have other technical indicators to validate the move. That can be MACD, that can be the TTM squeeze, that can be ascending, descending lines, that can be RSI, whatever oscillator you like to use that's going to confirm the trend. Because remember, the trend is your friend, but you need confluence from multiple types of analysis, both technical and fundamental, to make sure that you're on the right side of whatever it is that you're doing, right? Now, here are some common technical mistakes that you should avoid. Over-reliance on signal time frame analysis. I'm going to make this as simple as possible. Don't just get in the trade because the 8 crosses the 21. That's silly. It doesn't make sense. For many, many, many months in 2022 and leading into 2023, the market was full of EMA traders. It was like, I don't know, like someone had found, discovered the fountain of youth. And what happened? Real traders with real weight started to realize that retail had picked up on the EMA crossovers. And what were they doing? They were waiting for a 9 or an 821 EMA cross, and people would pile in long, and then suddenly it would get smoked and they would blast it all the way down. And everyone was like, what happened? The EMAs don't work. Well, guess what? If everyone is piling into the same setup, everyone's going to look at the bigger traders are going to see it and say like, hey, every time this signal happens, the market keeps pushing higher. So who's behind this? And there's going to be someone on the opposite side of that trade, right? So there are times where people are just reliant on crossovers and they get smoked. That is why you always want to have more confirmation than just simply taking crossovers. People neglect the broader market context. So, oh my God, there was an 821 EMA crossover on the 5 minute. But on the bigger time frames, it's completely bearish. But you think that because on the 5 minute, suddenly things flip bullish for maybe 30 minutes, that you just caught the bottom. No, that's not correct. You need to look at the broader market and understand what is happening. What's another common mistake that people do? They trade against the major trends. Oh, I'm going to catch the top of this one. This is going to be the short. This is it. We're overbought. We're overbought. It has to come back down. Guess what? That's not always the case. EMAs exist to show you that the trend is continuing. Remember, if you're highly dependent off of an oscillator like MACD or RSI and it's in the overbought or oversold area, you can remain in the overbought and oversold category for months. Price can trade in overbought and oversold for years before it decides to come back down. I've been in trades where I've been watching price continue to go up and RSI is well above 70 and it stays there for weeks. And you're like, when is this going to come down? It just stays there, right? So don't neglect the broader market context and don't trade against the major trends. How do EMAs also fail you? Well, people think that, oh my God, we have a major crossover. We have a death cross on the 5,200. I'm going to buy 50 contracts. Why? Why? It doesn't make any sense. You trade the same way you're trading. This is all about capital preservation. Now, if there's a great setup and you already have confirmation that it's going to be a great setup, and suddenly you have signal from your EMAs that the trade that you want to get in because you already have confirmed that this is, at least from your perspective, going to be the right trade to take, and you get the confluence from a 5,200 death cross, guess what? Put on some weight, but manage your risk. Don't over leverage your position thinking that you suddenly are going to, hit a home run. Let me go to the conclusion here. Moving averages provide valuable technical insight when properly implemented within comprehensive trading strategies. I was very specific when I wrote this line. Comprehensive trading strategies. Don't just depend on squiggly lines. You have to understand price action. You have to understand support and resistance. You have to understand levels. You have to recognize the broader market sentiment. Are you in the wrong sector? Is there market rotation? Etc., etc. Success requires understanding both the capabilities and limitations of EMAs or SMAs while maintaining strict risk management protocols. I cannot tell you how many times people have come up to me and told me or send me a message, hey, JP, I tried taking a trade off a bounce on the 9 EMA, and then it went back up and I got in and then it just went right through. What did I do wrong? Well, did you get any confirmation to get in in that trade? No, it just broke above it, so I followed it because I thought it was gonna go up. I thought. Well, you thought. Well, trading is not about what you think is gonna happen. Trading is about using your brain and implementing everything that you have on your screen to take an educated guess, right? Or an educated position while maintaining risk management. So keep that in mind. Very important. Moving averages are lagging indicators that should be used in conjunction with other technical analysis tools for optimal trading decisions. Everything that you have on your screen is lagging. It's historical data. So you're depending on previous information to give you validation that things are going to continue in that direction, which is why Heaven is a big advocate of understanding price action and volume. Because the only real time data that you're ever going to get is what? Price action. Price will tell you what's going on. There's buyers and there's sellers. End of story. EMAs will give you historical data, even on the smaller time frame. They're lagging. So keep that in mind. I'm going to go ahead and close this PDF, and I'm now going to open up a chart. And I'm going to show you guys how to put EMAs on your screen and what are the indicators that I use for EMAs and SMAs.
Hey, JP, your stream's paused.
You can be the kind of person that sits here and just types EMAs and then, starts adding.
JP, your stream is paused.
Oh, sorry. My bad. Let me switch over now. Thank you.
Yeah, no worries.
Share screen. Share audio? Stop stream. Change window. Why am I talking while I'm saying what I'm doing? All right. So now let me show you how to apply these EMAs and SMAs. I'm going to make your life simple. I want you guys to go on indicators and type exactly what this is. 6 exponential moving averages and 2 SMAs by a guy named Chalol or Chalol, whatever it is. Okay? See if he still has the script up. 6x, there it is. Perfect. You're going to go ahead and you're going to add it. I already have mine set up, so it's automatically detecting it. My setup is the following, okay? You can change it and do whatever the hell you want with it, but I'm going to show you what I do. Now, I change this EMA to the 8. Some people like having the 13. I've started implementing into my trade setup. I don't think you guys need to do that if you want to use EMAs, but you can use the 8. And then that's EMA 1. EMA 3 will be the 21. EMA 4 will be the 50. And then EMA 6 will be the 200. If you guys want to take a screenshot of this, go right ahead. I'm going to go ahead and switch over to style. And the only EMAs that you're going to have turned on are the EMA 1, the EMA 3, the 4, and the 6. So basically that's going to be the 8 EMA, the 21 EMA, the 50 EMA, and the 200 EMA. I'll let you guys take a screenshot of this if you want. I'm going to go ahead and pause for a moment. If anyone wants me to go back to inputs or style, can you please type in main chat or in live sessions? So everybody has that. Does anybody need me to go back? Please let me know. Okay. I'm going to go ahead and close this. So we know that we're using the 8, the 21, the 50, and the 200 EMA. Now this indicator over here is life-changing. This is the daily SMA 10, 20, 50, 100, and 200 by a guy called Immortal Freedom. So let's see if Immortal Freedom is still, if he still has his script up. What's going on here? Did he
You gotta
get rid of
search
it?
up the name, not the person's name. So
Oh,
you
yeah,
gotta
my
search
bad.
up daily SMAs, yeah.
Oh, there it is.
Yeah.
It's this one. This is a lifesaver for everyone. When I show them this, they freak out. So you're going to go ahead and you're going to add this to your chart. And you're going to say, hey, JP, those lines look exactly the same, or kind of. No, they don't, and I'll show you why. These are the daily SMAs. I'll explain to you what they are. This is the time frames, the 10, the 20, the 50, the 100, and the 200. You can opt to take the 100 out if you want. You can opt to have it in. I don't have it on. I use these colors because I like these colors. Inputs remain the same. Nothing changes. You can actually change the SMA periods here, but these are the ones that you want to use. The 10, the 20, the 50, and the 200. Disregard the 100. Again, if you like the 100, you can have it on, but if you don't even bother with it. So what exactly is this? These daily SMAs are exactly what you think they are. They are the static daily simple moving averages that remain on your screen no matter what time frame you're using. So if you look at the 10-day SMA here, you see that the price is 229.80, right? Because we're on the daily. Keep that number in mind. I'm going to go to a smaller time frame. Where's the 10-day SMA? It remains here at 229.80. What does this mean? These means that these are your static SMA lines that remain on your screen and do not adjust themselves by time frame. They only adjust themselves once the day is over. So these are golden. These are possibly this is possibly the single best indicator that exists, in my opinion, on moving averages for any type of moving average trader. Because why? Because you want to know where you are in comparison, where you're trading in comparison to the major SMAs. So, for example, if we're looking at this on a daily chart, right? And we're Tuesday, Wednesday, Thursday, whatever it is, right? Tuesday. Price broke below the 50-day simple moving average. And if you recall from my conversation, when you break and close below the 50, you're going to have what? A continuation trade to the downside. So you can see that it doesn't matter what happens here, we broke below the 50, which is showing you bearish trend. Now, the 200 EMA is all the way down here. Now, if Amazon went all the way to 197, we got a serious problem. But we broke below the 50, which would have given you an opportunity, right, throughout the day to say, hey, you know what? It's 3:30 or whatever time it is, right? What time was this when the market was closing on this on February 18th? You could have taken puts at the close because guess what? On the 30-minute time frame, price pushed down below the 50 and you would have woken up the next day and caught this entire move. Because once you break these major static daily levels, you're going to have more than 80% of the time. Again, this is not a proven statistic, it's just I'm throwing out a number, you're going to have a continuation to the trend. Incorporate that with your EMAs, and now you see how you broke a static daily simple moving average. And guess what? The next day, price broke and closed below the 50, and price continued to push down. It pushed all the way down, and it didn't. It tried to go bullish when it broke and closed back above the 21, but you were still being pushed down by the 50 EMA on the 30, which came and showed you that it was still going down. And then you can see that it did the same thing. It rejected the 50 and came down. What we can tell by simply using a combination of daily static SMAs and EMAs is that price has picked a direction, and that you, if you're playing a swing and you're not getting freaked out if you're up and down a couple of percentages on this kind of trade, that you're on the right side of the trade. Because again, you've broken a major level that is indicating to you that you are, once again, in the right trade. Granted, people would say, oh, JP, but look what happened. It went all the way back down, and it went all the way back up. It went back down. And if you're in a swing, and you have a month time on it, and you're freaking out about this price action in one day, then you got a major problem. Because if you're in a swing and you know that you have a bigger move to the downside, what do you not think that the opposite side of your trade is trying to catch a pop to push it back above a major trend directional change? Of course they are. But so long as you stick to your rules and you have a continuation of trend in the direction that you want, and you obviously at this point, if you took that short the day before and you took puts, and as you all know, Kevin is a big advocate of waiting until the end of the day to take the trade. You took this trade and you were in risk-free runners. You could have taken that put and left it to break even, and you would have still been in this trade, and who knows how much this would have gone. That's the beauty of waiting the last 30 minutes of trading and having the ability to be in risk-free runners. So let me go ahead and give you an example of how you can see a major shift in direction using EMAs. So here you have a 30-minute chart. And this is a perfect example of how to use EMAs on the bigger time frame to your advantage. Price is trading, obviously you had a gap up. This was earnings. Forget that earnings existed, but let's just assume that, let's take that into consideration. Price gapped up. Price never broke below the 50. Notice how you have all these EMAs stacked together and crossing to the upside. And notice how price always maintained above the 50 EMA. We never broke a directional trend for the bullish move. What ended up happening? There was an attempt for the 8 EMA and the 21 EMA to cross to the downside. And if you were the guy that thought that this was going to happen, that it was going to break down and cross over, and you took that trade before you got confirmation on the crossover, guess what happened? You got what I used to call the wiki fake out, right? This is an old trading friend of mine named JJ, one of the best EMA traders I ever met, one of the sweetest guys in the world. Always told me, watch out for the fake out, because this is what happens. Price will look like it's going to go bearish, and then what happens is they push it right back up, and then you have an explosive move. When you see EMAs do this and they fail to break down, you bet your ass that you're going to have an explosion to the upside. Because what happens is price is telling you that they're refusing to break below. And then guess what? You have this major move. And look at how the 8 EMA, we never broke below the 8 EMA, ever, up until we did. And notice that when we did, there was a crossover over here, but we still held the 50. We never had a directional change to the bearish side. It held the 50. And then guess what? We had another explosion to the upside. This is how EMAs can be your friend. This is how you use them with as confluence to price action. Now the cool thing about it is when you combine them with these static levels, these static daily SMAs, you can start to have a better understanding of where there could be a bounce. Here's a perfect example. So we broke below the 10, we came to the 21, right? Because these are known as magnets. You have a tendency when you break a major SMA, it always has a tendency to try to go to the next level down or the next level up. Look at where we bounced. We bounced right off the 20. We tried to come back up to the 10. We failed. We held the 20. Then we broke down. And we traded below the 20-day. We never made it to the 50. We still didn't have a directional change on the broader market perspective. Remember, these are daily static ones, right? Guess what happened? We broke right back above the 10, the 20 and the 10. And then you had this move right here, where you had the 10-day SMA cross above the 20-day SMA. So remember, these indicators, the simple moving averages are slow moving. But when you get two major static daily crosses, you're just going to have a continuation to the upside because you had a major daily cross. Let me show you what I mean by that. Here's the daily EMA, the daily SMAs. The 10 crossed the 20. Price kept going up. We always stayed above the 50. The 200 carried the way. We never broke below the 50. We tried to break below here, but you know that the 50 is what? It is a directional change. We never broke below it. Notice how close the 200 is to it. It was walking alongside of it. Then finally, you had another EMA crossover, and we're still holding the 50, and price continued forward. Why am I bearish on Amazon now? Well, I'm bearish on Amazon because you have two major daily crosses. You have the 10 crossing the 20 on the daily static level, which again, these are dailies. Price broke below the 50. And do we think it's going to go all the way down to 197? Probably not. Do I think it's going to go to 215 and could I catch a good short? Probably. But I now know that there's been a changing on the guard on Amazon because we're trading below the 50-day SMA and we had a bearish 10-20 cross on the daily. Okay? These are how SMAs work in your favor. Whenever I'm trading and I'm trading with Kevin, I'll tell Kevin, listen, it looks like we're bouncing off the 50-day on this trade. And he goes, yeah, I see that. He doesn't even have SMAs. He just looks at price action and he can tell that something is happening here. And I'm not even looking at price action that much. I'm looking at these major SMAs as confirmation. Are we going to break below it or are we going to break above it? Does anybody have any questions about how I use the daily SMAs for confirmation of trend? Anyone?
JP, I think you should honestly continue, and then I'll ask you the questions afterwards.
Okay, cool. Now let's combine these daily levels, these daily SMAs, with EMAs. And let's use a smaller time frame. I personally do not like using EMA crossovers on the 5-minute. I think they're invalid. They give too many fake signals, and I like looking at the 15 and the 30-minute chart. Why would I have taken a short on Amazon here? Well, I would have taken a short because we failed to break above the 50 on the EMA. And even though it kind of felt like it was going to pop, you can see by simply drawing, excuse me, sorry about this. I lost my my position on chart. You can see by simply drawing that level there that we rejected that 230.99 on 1, 2, 3, 4, 5, 6 candles. Notice how on the 30-minute it tried to do an on the 50-minute it tried to do sorry, I didn't mean 30, I mean 50-minute. It tried to do an EMA crossover here. But it didn't do it. It was a fake out. And what happened? Price broke down and the EMAs started pushing down, 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 down. And look at to where price went. It went straight to that 50 SMA, which is the daily. You could have taken this trade on a failed breakout or crossover on the 5-minute, on the 50-minute on Amazon, right? That 15-minute would have broken. You could have taken the trade here and rode the wave all the way down here. And notice how it's almost perfect where it bounces. Because most of the time, a lot of orders are sitting at these major levels. They just simply don't want them to break. Okay? Here's another example. You had a 15-minute EMA crossover here. But notice that the 50 is serving as a line of defense. What happened? It couldn't break the 50. It closed below the 10, the 8 and the 21. Price pushed down, broke the 50. And once you broke the daily 50, it just, it just took a dump. And you could have been in all of this trade and never been freaked out. Now, don't get me wrong. When you see this kind of break here, you kind of get freaked out. But you always want confirmation, right? You want confirmation on the break. You always want to see if it's going to come back below the level or if it's going to retest the EMA and then make another move up. A perfect example, if you would have been in a short, you would have been in risk-free runners, you would have had your stops in profit. A lot of people would have gotten psyched out with this EMA crossover. But if you had a level up here, right? Because this was a freak candle. We never broke and closed above that on the next day, right? Whenever it tried to do it. So you would have had that as a level and it broke down. This is where EMAs can give you false signals. Because here you would have thought that it was going to flip bullish. But that's where, obviously, levels come into play and other types of indicators for confluence come into play. I'm going to end this here with my explanation of how EMAs and SMAs work, because there really isn't much more to them other than that. What I want to emphasize is that moving averages function as nothing more than a continuation to the trend of a trade that you see is going to work because price is dictating that it's going to do so. And I really want to emphasize that.
Yeah, so I'm gonna ask a few questions that you got. Before I ask the rest of them, most people are asking if you can show the indicator. So if you can remove it and then add it back on and show the settings again.
Sure.
For the EMA and SMA.
Okay. So This one is the 6 exponential moving averages and 2 SMA by Chalol. So you just type 6 exponential. Why is my mouse not working? There it is. And you should pop this one up. You click on it. And then you can just click on the line. You don't have to click on the settings. You can change it to whatever color you want. I mean, I like the blue. You have the EMA 1, the 3, the 4, and the 6. And then the inputs. I always use the 8 as opposed to the 9. It's a personal preference. Some people like the 9, some people like the 8. I like the 8. You're going to have the 8, you're going to have the 21, you're going to have the 50, and you're going to have the 200. The 13 and the 100, you guys really don't need that. Just the 8, the 21, the 50, and the 200. And again, these are the EMAs, these are the colors. 1, 3, 4, and 6. And there are the inputs one more time. And for the SMAs, it's this one. The daily SMAs 10, 20, 50, 100, 200. And all you got to do is type daily. And it's going to be this dude, Immortal Freedom. You're going to know how you click that on. And your colors can be whatever you want. I just personally like these. This remains exactly as it is. You can take a screenshot of that. And there you go. Now you can choose to have the 100 on or the 100 off. I don't have it on, but these are the most important ones, in my opinion.
Why don't you have the 100?
If you break below the 50, it's gonna try to go to the 200 most of the time. The 100 sometimes serves as like a break, right? But I mean, I just don't even take it into account, to be honest. It's my personal preference. I know people that have it up. I just don't need it.
So I'm gonna ask the other questions. So
Sure.
one of the questions was the cross, does it have to be EMA and not SMA?
Oh, it could be either or. The reason that I have the SMAs up are because I want you guys to see the daily static EMA at where it's at. But I use EMAs for my major trading. I'm a day trader. I'm a swing trader. I use exponential moving averages. These are static. These are static. If you have a death cross, a 5200 on the daily, get the hell out of Dodge if you're long. Let me give you an example. Let me look for a death cross or a golden cross on Meta. Here's a perfect example of a golden cross. The 50 crossed over the 200, and look at how price just went. Right? These are just static, guys. Remember, these don't change by time frame. They
What
remain the same.
you said Meta? Are you showing Meta or Amazon?
Oh, sorry, Amazon. I
Okay.
meant to say Amazon. But for example, here's an example of I want to take all these lines off because sometimes it gets people, it confuses the shit out of people. Here's a perfect example of a golden cross on an EMA on a 30-minute. The 50 cross to 200. That's a golden cross. And look at how price just kept going. But this is a beautiful example of EMAs working in your favor. You had an 821 EMA cross here, right? Here. And then you had a continuation of trend with a 5200. So if you have an 821 EMA cross and you got a 5200, why the hell are you going to be short? The 8-day moving EMA is telling you that it's bullish. The 21 is telling you that it's on the 30-minute, of course. It's telling you that it's bullish. The 50 is telling you that it's bullish. There's no reason to try to be short. Yes, there's a short here, there's a short here. But the bigger move is what? Is it bullish or bearish? Bullish. So when you have this cross and you have that cross, don't try to fight the trend because it doesn't make any sense. Because all the major moving averages are telling you that it's what? bullish on the 30-minute time frame.
The next question was, should we use SMA 50 and 200 versus EMA?
Okay, so now there are people that prefer to use SMAs over EMAs. I personally like to use exponential moving averages because they move faster and they take into account current price action from the current candle as opposed to SMAs that are using equal weight. It's a preference of choice. Some people like exponential moving averages, some people like SMAs. It's whatever you feel more comfortable using. I have found that EMAs work better for me as a day trader. However, for continuation trades on a bigger perspective, I will use SMAs on the daily. I will see if I want to take a swing trade, right? The first thing I'm going to go do is I'm going to come see is like, okay, well, am I on the verge of having one of these? That's a 10-20 cross, right? And I know that if I'm going to have a 10-20 cross, and I know that the 50 SMA is holding me as support, I know that this signal right here is telling me that on the short-term time frame, on the daily, which is the 8 and the 21, we're going to have bullish momentum. This to me, whenever I see these type of crosses on the daily, I just love them. What I do is I wait till the next day to get confirmation, right? You just don't take it on the same day that it crosses. You wait the next day and then you ride the wave. SMAs, EMAs, it's all about a preference of what it is that you like to use. Do you like to use things that are more reactive to the immediate price action, or things that are slower, less reactive, and put equal weight on each candle? That's all it is. EMA 50, EMA crossovers, and SMA crossovers all function in the same way. It's just a matter of, do you want a faster crossover or do you want a slower one with more confirmation? Does that make sense?
Yeah, it's pretty clear. Let's see. Let me just ask the questions in order. So let me pull it up. So someone asked, can you show us how do we use the EMA as a daily trader on a chart, such as Tesla?
Sure, absolutely. Let me go to this demonic stock. Let me give you a 5-minute. This is let's use a better version. Here we go. Perfect. What time frame is this? This is you're trading Tesla. Here's the 200 EMA on the 5-minute. The 200 EMA on the 5-minute has a great tendency to be a major support. If you break and close below the 200, you're normally going to push further down. Obviously, I don't have Tesla charted because I have a personal vendetta against Tesla, but I don't want to talk about that. But here's a perfect example of a great 5-minute trade on a 5-minute chart. So you would actually end up doing this. You would put the 5 and the 15 side by side, right? And let's just find what time frame this is. Where is this? It's here. Yeah, perfect. Okay. So notice how when price came down to the 200 EMA right here, it's also the 50 on the 15. So we had, even though it broke down, right? I'm sure that somewhere here there might have been a level. Actually, this is a level, isn't it, Kevin? You probably have a level here at 347. Do we have a 347 level on Tesla? I think we do, don't we?
Yeah, I have it around 347, 348.
I knew, yeah, it's that stupid 347, whatever. So you probably had a level over here, right? We probably held that level. You broke and closed above the 200. Okay, now you broke and closed above the 200 on the 5-minute, and you're like, wait 1 second, I got to pay attention here. What's going on? You look at the 50, the 15, and you're like, okay, we're back above the 50 on the smaller on the 50 on the we're back above the 50 on the 15. So wait one second. Okay, this looks like there might be an impulse to the upside. So here's where you get smart. You wait for the 5-minute candle to come up to the 21 EMA. Normally, it will reject and come back to retest either the 8, the 9, in this case is the 8, and the 200. When you see this wick off the 200, you fill a long position. Now, granted, you got to remember it's Tesla, so she does whatever she wants, you know? She's going to go dancing with her girlfriends without telling you. That's what Tesla does to you, right? And then it traumatizes you. So, it broke and closed above the 8. It broke and closed above the 21. Notice how it held the 21. When you come over here, you can see that you had an 821 EMA cross. Remember, you're in the trade when it broke above, when it went up to the 21, rejected, retested, and broke above the 8. It's using the 200 as support. You get in a call. You put your stop a couple of points. I would probably put it down here because you don't want to get wicked out, right? And you follow the 8 EMA. You have a confirmation of an 821 EMA cross on the 5-minute. You got a confirmation as price continues to push up of a 15-minute 821. By this time, you're already green on the trade. And once you have a 5-minute 821 cross and a 15-minute 821 cross, you just sit back and you just follow the trend and you just ride it. Notice how far we went on this move before it stalled out. There's no coincidence that that's the 200 EMA on the 15. I can almost assure you that if I open up the 30, there must have been something up there as well. Oh, I forgot it. Let's just go back to the 15. Right now I lost track of where I was here, but it doesn't matter. But what I'm trying to get at is that at this point, the trend is your friend. And here you have an understanding of where you can put your stop based on the 200 EMA. Because remember, you waited for it to break and close above the 200. It went and retested the 21. It came back down. Then it went back and it broke above the 9. You automatically know at that point that you have buyers here. Look at that wick on the 5-minute. It's pushing up. You have an EMA crossover. Oh, you probably would have gotten scared here because it went down. You never close your position until the candle closes because this happens. You have to wait for candle closes. You cannot allow price action on one candle to make you think that it's going to completely collapse and take you out. And there's your continuation of the trade. Notice how it never broke below the 50. It came back and retested the 21 a couple of times. But let's be honest. If you took this from here to here, I can guarantee you that 99% of you would have already been out. I would have. I probably wouldn't have been in a runner. And then Kevin would have been screaming at me. Because if I would have taken this trade and I would have caught this pop, I'd be up huge. And then I can just leave a risk-free runner and set my stop loss to break even. And I could have made so much more money on this move. Once again, I cannot emphasize enough. If you're in the right trade and you're up and you're making money, leave a runner. Because this move from here to here is great. That's an amazing Tesla trade. That would have been probably 70, 80%, maybe even 100 if you bought the 355s. But the move from here to here, forget it, man. That's what grows accounts. Notice how we followed the trend was your friend. The EMAs just kept pushing up until they didn't anymore. But again, you just can't depend off EMA crossovers. You have to draw your levels of support and resistance.
So we have a few more questions. I'll get to the futures one after this next one, but the question is, so Amazon is at a 0.786 fib retracement and S2 pivot under the 50 daily SMA and 50 EMA. What to do when they give the mixed signals?
Sorry for all the noise here. So you're telling me that Amazon is trading below what? Can you give me
Yeah.
the
So I'll say it again. So Amazon is at the 0.786 fib retracement and
mhm.
S2 pivot, but under the 50-day daily SMA and the 50 EMA. What to do when they give mixed signals? Because she's basically stating that since it's at
I
the 0.786 level, it
it's
might
it
bounce.
yeah, I get what you're saying. I
Yeah.
get what you're saying.
Okay.
So, Kevin, I
Huh?
think you would be better suited to answer this question when it comes to the Fibonacci side of it. But for example, I'm just going to go ahead and answer it from my perspective when it comes to pivot areas and the trend. I'm bearish on the weekly on Amazon. I'm bearish on the daily on Amazon. I'm bearish on the 4 hour on Amazon. So when you have areas where you have like an S2 down here, right? That it's trying to hold support, you're trading below a weekly. This is a weekly pivot. What's stronger, a weekly or a daily? A weekly. We failed to get above a weekly. We're below the intraday pivot structure. I don't feel comfortable being bullish because the way that I trade is telling me that there is a breakdown of trend. We're failing to hold a weekly pivot. We failed to hold an intraday pivot. And sure, maybe there's a possibility of a bounce somewhere, but look at the daily. Look at this daily RSI. It's still pushing down. Look at the MACD. Look at that histogram. Oh my God, what did I do? There we go. Look at that histogram. It's completely down. Let's go to a 130 minute. Sure, maybe it might have a a short little pop here, but I don't see anything, even on the daily, that's telling me that there could be a potential pop. Nothing is telling me that there could be a potential pop, especially the relative strength index, because you have to, at that point, look for support on the RSI. Where is there daily support on the RSI? Maybe a little bit down here. You still have a little bit more room down here for it to go before it maybe bounces. But when it comes to Kevin, when it's in that fib range, you're technically looking for what? A potential small pop, but the trend is still bearish, correct?
Yeah, I mean, when we were talking about the fibs on Tuesday, I stated that the lowest level for the fib retracements, which is the 0.786 ratio, it's one of the more riskier levels because, yes, you could get a bounce off of it, but usually it's short lived because you're literally retracing 78% of the move, you know? So, especially if you're drawing a bullish fib, if it's all the way down at that fib level, there's a lower chance that that bounce would be long lived or significant. Yep. So,
So
yeah.
overall, I'm bearish on Amazon. Could there be a short-lived pop? Absolutely. There could be a short-lived pop on anything, right? But I'm not going to be bullish on something until I get confirmation, especially when I'm looking at this. Because, in my opinion, I think we're going to go for 216 because there's nothing really stopping me from going to 216. Am I going to use like maybe this little level here? Maybe, yeah, 220. But this is really the area that I want to see. There's a little gap to fill to the downside. I don't want to be bullish here. Oh, there could be a falling wedge on the daily. I'm not bullish here because my system is telling me that it's not ready to be bullish. And I do not want to be bullish until I get confirmation. I am not in the game of guessing if something is going to happen. I want confirmation that something could happen as opposed to maybe it happens and I'm going to get into it right now and then, oh, I was too early and then I get whacked. I don't want to be that guy. I've been that guy for too many times. The definition of insanity is doing the same thing over and over again, expecting a different result. How many times do you have to lose on your trade before you start saying, wait, I'm going to wait for confirmation on the bigger time frames before I decide to go long in this case, if that makes any sense?
Yeah, absolutely. I'm gonna ask this question about futures, but before I do, there's a quick one over here. So someone asked, so technically the 200 is a moving key level, if that exists.
I want to understand your question, but I don't. Is it a moving key level? In other words,
It's like a moving support and
yes.
resistance.
I mean, moving averages are exactly what I mean. Yeah, they're moving, right?
Yeah.
But the 200 serves as a major on any time frame, let it be a small time frame or bigger time frame, as a shift of direction at that very moment. So yes, obviously exponential moving averages and simple moving averages are moving at all times because they're taking the candle into account. And the 50 and the 200 are serving as major areas of support and resistance. And of course, if you're going to have a breakdown below the 50 and the 200 like you did here, you can see that you're going to have a more push to the downside, right? So yes. So think of the 200 as a major area that you have to keep an eye on. And think of the 50 as okay, wait 1 second, what's happening here right now? Like, are we going to break above this and close above it? And are we going to go and target the 200? Most of the time, that's what tends to happen. Not always. But you can use those as bases. But again, you must draw your levels and you have to have them in correlation to your EMAs and your SMAs. In this case, your EMAs. Most of the time, you'll notice that the 200 EMA on a 30-minute time frame has a tendency to line up with a major level. It's just the dynamic of the game to me.
So could you show how to use these on futures? Such as since futures is mostly day trades, so give us like an example of a futures trade with using the EMA or SMA. And when you're trading futures, which one you would personally use?
Well, I have the SMAs and the EMAs up at all times. I'll give you a perfect example of the trade that I took today. I watched this breakdown happen in the morning on extended trading hours. I'm not sorry, not on extended trading hours. Here we go. This was it. When the bell rang today at 9:45, at 9:30, I had already seen that we had an EMA crossover on Wednesday that was pushing down on the 5-minute. And then when we opened today, price did exactly what I knew it was going to do. It was going to try to psych people out, right? with this candle and try to do a break and close above, but notice that this candle never broke above the high of the first 5-minute candle. And then when price broke below the 200 and VWAP, which is another story for another day, when it broke below the 200, I filled my short. Again, day trading, and I'm using the 5 at this point because I'm not looking for swings. I'm using it for futures. I knew that I was on the right side of the trade because the 8 crossed underneath, crossed over the 200, and price continued all the way down. And I don't have the levels that I had at that point, but I had the opening, I had the overnight low as my price target. And I had my levels somewhere, wherever the overnight low was, and I put my take profit right on it, and price went all the way down to the overnight low. It hit it, and I was out. Notice it kept breaking down even further. Oh, JP, why did you put the stop at why did you put your take profit at the opening at the overnight low? Because I wanted to make a certain amount of money today at the open. I didn't need to make more than that. I wanted to hit a certain amount so that I can be done with my trading day at the open. Okay? I got it, I hit it. When I was trading, I told Kevin, it looks like we're gonna try to hold the 10-day SMA. And I was telling one of our trading buddies, 21,983, that seems to be a major level. They're gonna try to bounce it here. And I was with Kevin, and I told Kevin, here comes the longs, and look at how well they brought this right back above the 10. And I didn't feel this. I wanted to, but I was already done. Kevin has taught me to just be okay with being okay. Okay? Because under normal circumstances, I would have gone ham on this. I would have filled like, 4 NQ longs and taken this from here to here, and I would have made a bunch of money. But here's an example of how the 10-day SMA on the daily served as a perfect base, right? For you to wait for that candle to close, go long, put a stop below this area, and then ride the wave to the upside. And then notice how we came right back down to the 10-day SMA and we bounced right above it. So what does this tell you? This tells you that the traders do not want to break trend below the 10-day. They want to hold that daily level. Do you see how that daily is serving as a huge area of support? And then what happened? Once everybody got signaled that we weren't going to break down below the 10-day, you could have just filled longs and just rode the wave all the way to settlement, which was where price closed today, which just happened to be an S1.
Let me ask the next one. 1 second. So, Adrian asked, would VWAP with the 8/21 EMA be a good combination for scalps or even day trades?
I have my VWAP on at all times. I have it. I mean, I have it at, it's the volume weighted, volume weighted average price. I have it up at all time. I use it as a target whenever I'm in a trade. If I'm long, I try to aim for VWAP normally when there's a lot of momentum. The VWAP has a tendency to be hand in hand sometimes with the 21 EMA. But yeah, I have VWAP on at all times. Think of VWAP as the middle of the range between all your EMAs. But I have it on at all times. But again, if I'm in a trade, I'll be targeting certain EMAs for trims and obviously if I'm in this bounce and it goes to VWAP and you're in 3 NASDAQ contracts, Adrian, I mean, you're going from 982 all the way to that's a 100-point move. You know what I mean? Like you're not. I don't care where it's going at that point because on futures this is a massive move. Make sense? But yeah, VWAP I have it up at all times. But that's explaining what VWAP is and how it's calculated is a completely different thing for another time.
So, that you guys could keep asking questions, but JP, I think you did a pretty good job explaining. I think the kind of way you could kind of sum all this together is just looking at maybe a few other tickers that people trade. So maybe let's look at. Well, I'm trying to think of something that's not been ranging. Nvidia. And look at it from a day trading perspective, if there was any day trade using the EMAs or SMAs, and if there was a swing trade at all, and how you would have executed it personally.
So, what would I have done in this situation? I personally don't like trading NVIDIA inside of this range. I don't need to go into details why, but Kevin knows why. I do not like this because it just chops you up in that $3 range. But if I was trading NVIDIA and I was looking for a short, I would have done the following. I would have waited. I don't even have it charted correctly, by the way, Kevin. So I'm only just taking this strictly off EMAs, an EMA crossover.
Yeah, that's the
I
best way.
noticed.
Yeah.
I noticed that we had this. Okay. While price was trading, we had that little 5-minute trend line. You can see that here people were trying to push it up, but what is this? If that's a high, then what's this, Kevin?
That's a lower high. So actually, that was going to lead into my next question. So a lot of people during that time would get trapped in buying calls. So let's say,
Why?
hold on, because people don't know. But let's say right now you're looking at what can you read from the EMA and the SMAs right now that would tell you maybe it's not the greatest thing to go long? Is there any
Well, the
indication?
SMAs, first of all, the SMAs are all over the place. The SMAs, these are static. So we're trading above the 50, the 10, and the 100 and the 20. So obviously Nvidia is bullish at this given time. But on the EMA small time frame trade, what did you say this was?
Lower
From
high.
here to here?
Yeah.
Exactly. So the fake out happens on EMA crossovers when people think that this is bullish. Is that bullish? Is there anything telling you that it's bullish right now other than a couple of EMAs crossing over on a smaller time frame? No, because this is what? A lower high. Price is not pushing higher. So what you do is at that point, when you see this candle happen, you don't take this trade. You want confirmation. You do not take trades on a break and close on one candle. You need confirmation that it's going to happen. And you always wait for the retest. You always wait for an EMA crossover break above retest. What happened? Price came up. Failed to create another high. Came right back down. And then, if you kept a close eye on what was happening, big wick. You could have drawn a trend line. You extend that trend line. Can't get above that trend line. And the minute that you saw this happen, this 821 cross, I have the 13 EMA up it's for my own personal it's for me. I don't really care about it. It's just aesthetically pleasing for me. Leave me alone. But the minute you saw this, you could have safely taken a short and put a stop at the top of the wick of that candle. And you could have ridden this wave all the way down to the what? 200. That is from 140 to 139. You would have taken what? The 138 contracts, maybe the 137.50s, and you would have made a bunch of money. But here's a perfect example of a short time frame 5-minute EMA crossover that can fake you out bullish, right? Because What did you not do? You did not wait for confirmation. There was no confirmation. It didn't go up, come back down, test the level, and then try to break up above this candle high. It never did that. So you take the short, and if it fails and it goes up, your stop is above the high of the wick of that candle. You're putting on very little risk for very big reward. And you could have done this without EMAs. I mean, Kevin, you don't need these stupid squiggly lines. You would have seen this right off the bat and you would have filled shorts, right?
Yeah, basically.
Because you probably would have also seen this, right? Something like that. And once you had that pennant breakdown, there's no going back. But I need the lines on the screen because they make me feel comfortable. In a perfect world, I wish I didn't have any of that. I wish I could just trade like this, but I can't because my brain is programmed to see these things. I'm trying to get to a point where I don't need them anymore, right? But for the time being, because I'm an old fart, incredibly handsome though, until I can re-psych my mind into getting rid of these, I have to use them. But here's a perfect example. You have two different traders. Kevin doesn't need any of that shit. And he would have taken that trade short. And look at how clean his chart looks. Me, I needed all this crap up on my screen. I mean, I really like it like this, to be honest. This looks awesome. But I'll be damned if I'm going to take a trade without my lines on the screen. But that's a perfect short. Notice how, once again, even when it bounced, this is another day, right? But let's assume that this is just a continuation of the same trade. Even when it bounced, what do you have? You rejected the trend line, and you had a continuation to the downside. Notice how the EMAs never crossed over to confirm that there was an EMA changing of the guard. On the contrary, it just kept going further down, and then you got more confirmation that there was going to be more pain because the 8 crossed the 200, and boom, went straight to S1, which I've always been an advocate of saying the following. Pivot points work, especially on intraday if you're day trading and on swing trades on the weekly. It literally just right to a T. You can't make the stuff up. I almost can guarantee you that without having this pivot structure up, if Kevin has a level there at 137.50. Kevin, do you have a level at 137.50?
For Nvidia, let me see. Oh
Or
my goodness. Okay, sorry, go ahead.
Or
No,
130, 136.80, 137.50, right around there?
130 what?
137.50?
Yeah, 137.20.
Go to hell. See what I mean?
Yeah.
And eventually you get so good at understanding these EMAs and understanding where they're going to be on the chart because you recognize price action that it just becomes automatic. Literally just becomes automatic.
So JP, actually, Jay Bosco was I'm gonna think his name is Joe Bosco, because I had a friend named Joe Bosco, but he was asking. This is a little bit unrelated to EMAs, but how do you know how to set up the flag and at what points? And then when I asked him to explain, he asked the bottom line he just created to get the flag to show that once it broke to the downside, how do you know at what point to set that at? And he asks because it seems the 9 EMAs touching it.
I have absolutely no idea what you just asked me.
So basically, you know how you start your trend line? You're like, hey, this is the trend line I'm looking at, the bottom one.
Mm-hmm.
He's asking, how did you figure out that you had to draw that trend line? Like, let's say the trading day is going on. What makes you think, hey, that's a trend line I need to look at? Is what he's asking.
Because I'm looking for touch points. I'm looking for as many touches on that trend line as possible. I like 3. I got 1, 2, and 3 here. To me, a trend line is valid when it has 3 touches. The more, the merrier. I mean, granted, you could say, oh my God, that's a trend line, but the angle of that trend line, it's sometimes when you have angles like this on trend lines, they're like not the best because yeah, sure, you can have a little pop and it goes, You always want to have, I think what was the theory? You wanted to have like a, is it what was that
Trend line
what is
cross.
yeah, well, yeah, that's what it is, right?
Uh,
You want to have that the angle of the trend line cross. I forgot what it was. You know what I mean?
yeah, I know what you're talking about, but
I
yeah.
can't remember what it was. But yeah, the EMAs have absolutely nothing to do with the trend line. These are just this is price action mandating what's happening in this particular chart. Remember, EMAs are lagging indicators. Price action is real. So if you draw a trend line and price breaks below that trend line, right? Let's say that you take off all your EMAs, boom, trend line break, right? Boof, it goes below. Where's your stop? Where's your stop on this trade if you think that it's going to go up? Your stop is going to be somewhere above here, right? You're not going to freak out over 30 cents, are you? You're not. Because what happens is if price gets back inside of that trend line or this little, whatever, that little triangle, and it breaks above, then that's a different situation. But if you take that trend line break, boom, it goes down, your stop is up here. Then when it starts to really break down and you're in profit, you guess what? You move your stop down. I always like to use the previous candle high as a stop. Price keeps continuing to break down, I'll put my stop here. Price keeps breaking down, I'll put my stop here.
All right. The next ticker I need you to look at is
Don't do it.
Celsius.
Don't. No, I'm not doing it.
Look
I'm
at
not going to do it.
Celsius. Look at
I'm
look at
not going
it.
to do it.
Look at it. It beat
I already
earnings.
know what it's at.
Do it. Yeah. Let's go. Celsius. Oh. That's so funny.
When
You know
did I
what's
tell you about this ticker?
you
When did
know,
I tell you?
this guy JP, he tried to catch the bottom on Celsius so many times. He got so pissed off. And ever since he got so pissed off, I tell him every time he brings up, I'm like, JP, just stop talking about it. But now it finally beat earnings, and it's finally out of the freaking consolidation it's been having. So now it's actually a ticker we can trade.
I hate you.
Hell yeah. Let's go.
36%, bro. 36 fucking percent.
Yeah, if anybody doesn't know, Celsius, it was similar to how BA was a few months ago. If it kept on creeping down, and even though there would be bullish setups, like the setups just would not work. It would just keep on crumbling to the downside. And JP tried
Wow.
so many times to catch it, and it wasn't his fault
Well,
because he got raw good setups, but it's
no, no,
just
no,
never
but
worked
here's the
out.
thing. So I knew that Celsius was going to come out with some information about the whole F1 thing, remember? And I
Yeah, but did
told
they
you,
ever do that?
no, because they're communists. They're communists from Boca Raton, Florida, which is an hour away from me, and I know where their office is. And they screwed me because they know that I know what they were going to do.
Yeah.
35%, dude. 35%. I tried. They're going to announce that they're going to sign a partnership deal with the Premier League, and they're going to be the main sponsors for the Abu Dhabi F1. Oh, it's going to come out. It's going to come out. And thank you, source. You suck. I don't talk to that guy anymore. By the way,
Good, dude.
I don't talk to that guy anymore. I blocked his number. I sent him a very nasty message with it. But yeah, but you know what? This is just ridiculous. I mean, you know, look at this. This is another example. This is a perfect example for Jay Bosco of like a trend line trade that I'm taking. I took XLE long today, and I know it looks really messy, but let me just clear some stuff out of the way. Um, I took this trade today long because we had this happening on the daily. We had a 1020 cross on the SMAs, which are the daily lines. And then notice that we're about to have a 10200 right here. And plus, we came right up to the trend line that I had been waiting for, right? Because I had drawn these two, connected these two, and I had this wick from yesterday. And I know how the XLE moves. All I needed was to break and close above this trend line for a continuation pattern to continue. So maybe tomorrow it does pop and I do get a good move. But if it does this, as long as it holds this trend line and I still have a continuation on the bigger SMAs, and when I look at the 30-minute, if I pop up my EMAs, as long as it holds this 10, I'm going to keep believing that we're going to go up to this 93.77 and then eventually hit this 95. But notice how the EMAs are helping me stay in this trade. I was in this trade earlier in the day, and Kevin told me, yo, dude, why don't you wait till the close? I said, no, I like it here. And I took it right around, I think I took it around 2 o'clock, right?
Yeah.
I never got nervous about this trade because I kept seeing this 21 EMA curling up and we held the 10. And notice how we came, look at this. Oh, I'm freaking out. It's coming down. It's going to go down. It's going to break down. No, it held the 9. It tested the 9. I'm sorry, it tested the 8, and then it popped right back up above that trend line, what I wanted. And I was up like 14% on this trade at the end of the day. I think Kevin actually ended up taking it at the end of the day as well, but I think you ended up taking the wrong strike, didn't you?
Yeah, you got the 95 calls. I got the 96 in the last like 10 seconds.
Here's another example of pins. Kevin took pins today. When Kevin took pins today, I just took this blindly because of this. Look at this. You want to talk about a perfect trade? You break and close above the 10-day SMA. You got a 30-minute candle break and close above the 9. I'm sorry, the 8, the 21, and the 50, and you have an EMA crossover on the bigger time frame. Dude, I didn't even question this at any given point. This is a beautiful setup. Let's look at it on the daily. If it can break above this 39.60 level, I know what Kevin's looking for. Kevin's looking for this. He's looking for the top of this candle. That's what he wants.
I want a ascending scallop, man.
Yeah, there it is. If this trade breaks down, where's your stop? Your stop is where? Can anybody guess? For me, as an EMA trader, it would be a break and close below. Our break and close below what? The 10-day. If price pushes down and breaks and closes below this, I'm out of the trade because there's a high probability that we're probably going to push further down and try to fill that gap to the downside if that's the case. I don't think that's going to happen because we can already tell from today's price action that no matter what these sons of bitches tried to do to push it down, the market just said, nope, we're holding it above the 10-day. So there's bullish trend on it. So I stay with bullish trend. Oh, but the RSI is getting to an area where it's going to be overbought. A stock can stay in the overbought category for as long as it wants and will break down whenever the hell it wants. So just because it's getting into an overbought area doesn't mean that it's going to push further down. But this is a great trade.
So I'm gonna yeah, I was gonna say you guys could get your final questions in if you have anything about EMAs and SMAs. If not, then I'll at least end this part of recording, and then we can have a little bit of time where we could go over tickers that let's say JP and I were looking at. So I'll give you guys just a few seconds. If you have final questions, you might as well ask them regarding the EMA and SMA. If not, then we'll go into the ticker part. But we do have one.
And if anything, anybody here, don't hesitate to send me a personal message. I'm happy to show you more stuff. Just let me know. Hey, can you show me this? I mean, Kevin and I are two of the most accessible people in the world. Don't hesitate to send us a message or send me a message if you want to know some settings or what are all these stupid lines that I have on my screen.
Unfortunately, I have too many messages. I haven't been as accessible. Sorry about that. But we have one question. So not exactly at the EMA. So if anything, go to the closest candle and adjust the bottom of the wick for the SL.
I don't understand what you're saying. What?
It's from our guy Joe Bosco, but not exactly at the EMA.
Something go to the closest. I can't even read that correctly. Am I handicapped?
Yeah.
Interesting, but not exactly at the EMA. So if anything, go to the closest candle and adjust to the bottom of the wick for stop loss. Give yourself.
He's talking about the stop loss you're talking about for Pinterest, right? So he was just clarifying on that.
Yes, I understand what he means. Yes, 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 yes. The answer is yes.
Let me see. Any final questions? Yeah, all right, let me end this part of recording. So we'll end the EMA and SMA part. We're still going to be here for the tickers. But again, if you guys are only here for EMA and SMAs, thank you for coming and joining us. Thank you, JP, for explaining all of this and putting the time into it.
No, no worries. I hope this was helpful. By the way, J Bosco, look at this right here on the 5 minute on futures. Look at how you got that 50, that 1050 cross. You look at it, you're watching it as it happens. Look at this. 1050 cross is happening as we speak
So I have
on
a
a 5
question.
minute. Yeah, go ahead.
Technically, that candle's not closed. So even though it's coming together at that point,
You gotta wait. You gotta wait
yeah,
because here's what
okay.
happens: the 1050 cross on the 5 minute, and I explained this earlier in the day when you and I were talking. When someone asked me, I said, I think it was Yeats, our trading buddy Yeats. I said, you wait for that 5200 cross to happen. Most of the time, when that 5200 cross happens in either direction, they're gonna push it in the opposite direction. So that 5200 is coming on the 5. You can almost rest assured that price is going to push down. When it pushes down and it makes that next leg down, okay? You wait to see if the next candle, okay, is going to try to break and close above the previous candle close. Because what these people will do